Well, Coal India has actually managed to do a little better than expectations. Its revenues, its profit after tax have been in line, but I think margins, where analysts were expecting a compression compared to the corresponding quarter, has actually managed to improve from where it was in Q4 FY20. So first up, we have the revenue, which declined 3% at 26,700 crore rupees. The profit after tax was down 1% at 4,587 crore rupees, and the margins were at 23.9% versus 23.2%. So it was almost a 70 basis points expansion. Now, the reason why we were expecting a compression first up is due to e-auction. This is the segment of volumes which Coal India sells on in the spot market. So when you do sell in the spot market, the realizations are better, the margins as well thus are better. So it's basically a high margin contributing product. Now, volume wise, it did well. 28.9 million tons, definitely picked up better than what it was in the corresponding quarter at 21 million tons. FSA was the problem. The volumes over there dipped to a little to 132.9 million ton versus 139.2 million ton. But, its realizations, the e-auction segment's realizations were definitely lower. The premiums as well in that segment were actually lower because of a variety of factors, because of international factors. And again, do remember that for the most part of FY21, Coal India's e-auction business has been a bit more, it's been on the down low. The first half of FY21, we saw e-auction premiums and e-auction realizations rather at around 14 to 1500 rupees per ton. This time around, it's at a little over 1700 rupees. In fact, 1752 rupees per ton is where the e-auction realizations are. Obviously much lower than what we saw in the corresponding quarter, which was at 2105 rupees per ton. So nevertheless, the fact that it is sequentially picking up is a sign that, we are doing well in terms of e-auction realizations. Remember that international coal prices as well are starting to pick up. So perhaps in the first quarter of FY22, we should see this number improving even more, perhaps even going beyond the 2000 rupee per ton mark. And that would, of course, go a long way in improving Coal India's numbers. We should see a big expansion in the margins as well for Q1 FY22 when it comes to Coal India. But, that's, of course, about the next quarter. Let's talk about, again, the quarter gone by and the year gone by, rather. Receivables, a key, monitorable for Coal India, has once again increased. As on 31st March 2021, receivables increased by 5,000 crores. A little, a smaller quantum than, than FY20, but nevertheless, it is an increase, and this is something that is problematic because Coal India has had it tough collecting its dues from discoms, which in turn have had bad financial health themselves. And interestingly, the company has also incorporated 2 new subsidiaries as it ventures into the renewable energy segment. So that as well is an interesting development by Coal India. Dividend of 3.5 rupees per share. Not really a very big dividend amount, but yeah, 3.5 is what Coal India has announced.